Hello and welcome to Understanding Credit. My name is Steve Medina with Union Home Mortgage. I am a loan officer. Union Home Mortgage Foundation puts on this workshop about understanding credit and the implication that it has in our lives. So I wanted to go over that with you and we'll jump right into it. So Union Home Mortgage Foundation, who they are, they're a private corporate foundation that is independent from the Union Home Mortgage Bank. They are headquartered in Cleveland, Ohio, and got established in 2015. The mission of Union Home Mortgage Foundation is to equip families with the tools and resources to achieve economic self-sufficiency. So understanding credit, let's go over some of the brief things that we're going to cover today. This workshop allows you to understand what getting credit approved looks like, the factors that impact the ability for you to get credit, how it's scored, what it's looked at, and how it impacts your money management and your future credit standing. So we're going to go over all of those things in hopes to help you achieve your financial goals. So why does credit matter? Why does the cost of credit matter? When we look at credit, we have to understand how to use credit wisely. Credit is a very helpful resource and a financial tool. A lot of times that you're using credit, you're using it for large purchases that you're not able to cash flow, or it doesn't make sense to cash flow hundreds of thousands of dollars when you can leverage that asset with credit. So what kind of assets are we talking about? We're talking about car loans, mortgages, credit cards, and even personal loans. So having good credit will allow you to be eligible for the best interest rates, terms on loans such as cars, mortgages, and so forth, even personal loans. So understanding that your credit has many more implications than just applying for a loan. Your insurance is attached to that on the premiums. It's attached to your credit report. Some jobs will not allow you to have employment or to even apply until you have a decent credit score. So we talk about housing options down here at the bottom. Not only do mortgages look at your credit score, but rental agencies do as well. And the higher your credit score, the more of an opportunity that you're going to have moving forward. So let's look at your credit report. Let's understand from that standpoint. What we're looking at are all the three major credit bureaus. So those are going to be Equifax, Experian, and TransUnion. Now, what do those companies do? Well, they compile and report information such as payment history, public records, personal information, so on and so forth. And they use that to provide credit reports to businesses who have a legitimate need. Rental agencies, mortgage companies, car loan, uh, auto loan departments, things of that nature are going to need your credit score in order to give you credit. So credit bureaus must report accurate information since these businesses are relying on those reports to make good lending decisions based on that credit report. So what does the power of time have to do with credit? Any negative information can stay on your credit report for a while, but it doesn't stay forever. Lawsuits, judgments, liens, foreclosures, bankruptcy, those stay on your credit report for about 7 years. Now, a Chapter 7 bankruptcy, you have different types of bankruptcy. Chapter 7 is a complete bankruptcy. It's going to be evident on your credit report for about 10 years. And positive information will also be on your credit report indefinitely. So it'll stay on there. Even when you close the accounts, you'll be able to see those on your credit report. Many people have problems with collection accounts. So now's the time to get a copy of your credit report and see what is on there and see what delinquent accounts that you can look at and see which ones you can clear up. So one of the last things we'll talk about credit are the credit scoring models. We want to know which credit scoring model is being used, so that way we can have the correct information and get rid of negative information that will affect you later on. So let's look at how your credit is scored. Lenders use credit scores to help evaluate different applications for credit, and these scores are determined by the information that is given and is predictive of the future credit performance is based on your credit history and your usage. So we look at something called a FICO score. It ranges from 300 to 850. This score is obviously looked at in a number of ways, and part of that is payment history, makes up 35% of that decision. Amounts owed is going to be 30% of that decision. Length of credit history, 15%. Any new credit that you add is going to be 10%, and the type of credit that is used. In other words, credit cards, personal loans, car loans, different stuff like that are going to make the difference in the type of credit. And you want to have at least 3 credit bureaus or the cards or the loan answering to those 3 credit bureaus, so that way you have a pretty relative score across all scoring models with Experian, Equifax, and TransUnion. So how do we improve your score? The most easiest way to improve your score or to keep it higher, to keep it where you want it to be, is to pay your bills on time. Not just sometimes, this has to be every time. Number 2 is to reduce your debt load. Limit open accounts. So don't have just several accounts. You do want to keep the longest history of accounts open and active. But if you have a lot of different department store cards, you can go ahead and close those. But unsecured credit cards, you want to keep open, the ones that you've had for a long period of time, if that makes sense. So avoid maxing out your accounts as well. You want to stay at least 30% under your balance. So if you have a $100 credit card, don't go over $30 in that card, and that would keep you under that 30% ratio. Avoid unnecessary balance transfers, and don't apply for a lot of credit applications. A lot of people are trying to get the best interest rate, and credit reports bureaus understand that people are going to shop around and look for different credit agencies and get better rates, but that should all happen in the span of a month. So if you're shopping outside of the span of a month, don't just let anybody pull your credit. You'll get a lot of inquiries about this from just different stores, for savings, for different things, and everybody looking at your credit is going to cause it to drop a few scores. So if you have that done often, can really lower your score. Now let's look at establishing or reestablishing your credit. What do you need to do to make that happen? Some companies will offer to repair consumers' credit. A lot of these charge a lot of money to do that, but you can do this all yourself. And this is the way that you're going to go about it. You're going to dispute anything negative. So I would get your credit report and dispute anything negative on there. If the credit bureau is unable to investigate a claim within 30 days, the information is removed temporarily. This rarely works since they're generally able to respond in that time. Sometimes even if the information is removed due to backlog on the results, it will be re-reported by another creditor later. So a lot of times that's what these credit repair companies will do, is try to dispute this negative information. But if it's accurate, it's going to come up again and again. So you want to make sure to look at your credit report and come up with a plan to either pay some debts off or pay them down. So going over these, looking at getting a secured credit card is a great way to reestablishing credit. If you're not able to get an unsecured card, this is where you purchase a card from your bank or a credit repository to reestablish your credit. with a secured card. So you'd put in $200, $300, and that would be your credit limit. You still want to stay under that 30%, even though it's a secured card as well. Getting a cosigner for a loan or a credit card, I probably wouldn't do a cosigner. I would definitely do an authorized user. I think that's a better way to go about it, is to look at becoming an authorized user with a family member or a spouse that has excellent credit. Just being an authorized user on someone's card is not necessarily going to raise your score, but if they have excellent credit, and like we saw on the slide before that, excellent credit is going to be anything 780 or above, then that is going to be a good move for you. You're going to float up with their good credit average. And do your best to keep your credit information as accurate as possible. So like we said before, beware of credit repair where they just try to dispute negative information. Disputing does not do a whole lot if it's accurate. It is not going to help you in any way. So we have to look at credit in the role of money management. So the reason credit reports get behind is just simply money management. Timely payments is the biggest deal with your credit. So make sure to make those payments on time. Cash for settlement or paying off collection accounts so you can collect some cash, save up, and see if you can settle these accounts for less than you owe. For instance, if you have a $2,000 medical bill, a lot of times that once that goes to collections, they've written that money off. So you can oftentimes get your medical settlement much cheaper. We'll say you save up $700 and you have a $2,000 balance, and you give them a call and say, hey, would you be willing to accept this as a settlement for the $2,000? And a lot of times they will. Sometimes you can go back and forth and have to talk to different people, and you can get that accomplished for a lot less than what you owe. So understanding the role of money management is understanding where you are and where you need to be and taking those steps to get there. Number three is saving for emergencies instead of turning to credit. Having a good, solid 3 to 6 months of savings for emergencies will allow you to not use your credit card so often. Now, I do say to use your credit card. I'm not a proponent of getting into debt, so use those credit cards for gas and groceries to keep them active and just show that you have credit being established. But I would pay those off every month, so that way you're not paying the interest, because a lot of times when you're either newer credit or establishing credit, your APR or the interest rate on those is going to be very high. I would say about 28% on a lot of those cards. So you don't want to carry that debt and pay the interest along with the payment to lower that debt. So go ahead and spend on things that you're already going to spend on, and that will help you in these times. And saving for emergencies is going to allow you not to be turning to those normal cards that you normally would. So another part of money management is tracking where your money goes, writing it down, keeping receipts. I know this can be cumbersome, and a lot of places don't even offer receipts anymore. A lot of things have gone paperless, but do an audit with your debit card or credit card. You will have those charges on there. So be a good money manager in understanding what you spend during the day, what you spend during the week, writing a budget, knowing how much is in each category for your budget. I know I'm getting a little bit off topic of credit, but it all comes down to money management. Computer tracking programs. There's a lot of free programs out there that will help you do this and make life a lot easier when you're trying to watch your spending. A lot of bank apps will help you with this as well. So if you don't have a bank that does that, see if they do. And if they don't, maybe you can switch over banks that allows you to see a graph of your spending and what categories that you're spending in, so you can get a better idea of where your money is going. Living within your means, increasing your income as much as possible. Your greatest wealth building tool is your income. So getting that as high as possible and prioritizing your spending, knowing where your money is going, postponing foregoing things if they're not in line with what you're trying to accomplish, your goals of that year. save up for things so that way you're not relying on credit, and don't get yourself into the emotions of a purchase and just purchase on credit. Save up for things, buy them when you're able to, and these are the fundamentals of money management. So deleting debt, getting rid of your high interest debt by reducing your interest, increasing your payments. You want to do this aggressively. So as you increase your income, as you budget, and the money that is left over in that month, you're able to save up. And as you're saving up, once you get a good, I would say, $1,000 saved up, go ahead and start attacking your debt aggressively because you're paying a lot of interest on that debt. And once that's eliminated, you'll have that money to yourself that you can start saving and working on that 3 to 6 months of income. So repay your debt while saving for goals. What does this do? It does a number of things. And this is the good part about money management. It allows you to do different things like promoting good habits. Money tends to run around if we don't tell it what to do. We spend it in different ways. So that way, if we have goals, we won't rely on credit for emergencies. We'll remember what goals that we have and make sure that we are headed towards our goals. So what should we do now? What can we do today? We can take these principles and apply them to our lives, to our credit, and see where we can be and set goals for the next 3 months as to where we want to be and what we want to do, what we want to accomplish, and what else can we do this year a little bit further down the road as well. Having a good plan will get you there. And that is what we're about here, helping you get financial education. Balance is through who this Union Home Mortgage Foundation is set up through. If you need anything further with financial education, any counseling, here is that information. You can give them a call, you can visit the website, and you can also reach out to me as well. More than happy to look at your situation, do what I can to help. And I thank you so much for allowing me to go through this with you. I really get excited to talk about this stuff. It makes me very happy that people are wanting to learn more about their finances, about their credit. And I think it's very needed in today's world. So hope you have a good one, and we'll talk to you soon.